Testing 1, 2, 3, 4, 5, 6, 7. Hey guys, sorry, there was a I had a screw up with the meetings for some reason. I don't know why all my settings went awry, but somebody give me a sound check. Let me know if you hear me okay, and if you guys are seeing the screen. Hey Karen, good morning. You guys seeing the screen okay? All right. As I speak, we're having a possible setup here, right here. There is a new indicator. It's a variant of the old indicator, and you're going to see like a new signal showing up on this indicator. You can download it when you have a chance. But we're going to watch the NDX here. If this candle closes with the indicator showing, we're going to get long NDX here for a 1020 trade as I am speaking. So we're going to get long now 13 and targeting 23. Let's see if we can get that move going on the move. And I'll explain what the difference is in this particular indicator versus the old one, but it's under the new combo new, and hopefully it's it gives us just a little bit more of an edge than before. So I'm trying to see if we can get up to, we're looking for 23 on the move here. Let's see if this thing is 96, 14 plus this. Yeah, it's about 23. Okay, we'll see if this this works out. It broke out to about 5 points in the money for us, but I'm trying to hold to target on these moves to see if we can get the full move here. It seems to be breaking out a little bit. All right, if you guys want to take like 17 here, 18 here, that's 5 for you guys. If you want to hold on to 23, be my guest. Is 20, 22. I am going to take my own off right here. So I took mine at around 20. It's we should be targeting 23, but it's opening range, a little bit volatile. So I'll take what I can get. And then I'm going to explain to you what the indicator is all about, which is very, very cool. Hey, Crossy, good morning. Good morning, Boris. Karen, you take that trade? Anybody take that trade? That was a nice, clean trade for me. It was for like 7. Maybe for some of you guys, it'll be like 5 or 6. But it was a nice, clean trade. I mean, if you're still in it, it could be floating all the way to full 10. But we already took the profits on the move. So I'm going to show you this. Let me just redo this again because the indicator is called combo new, as opposed to just combo alerts, or combo alerts new. Sorry, combo alerts new. And there is one interesting tweak in it that that I really, really like. And this is MT4, so it looks like crap as usual. And you just have to bear with me on the visuals. You can definitely see the visuals once you see what they're all about. But it's MT4. So the basic premise is we're still using trend breakout strategies. Trend, top 3, breakout, that's still there. The difference is we have what I call true versus false trend breakouts. True trend breakouts are marked by this, half color triangle. You see this half color triangle? Let's make sure everybody's seeing my my visuals, by the way. It looks like we probably go to 23 on this move. It may have actually already gone. Did it go to 23? What was the high? Almost 23. There you go. So if you held on, you probably made the full 10. But anyways, you guys seeing this little triangle? This is what I call the triangle of truth, right? This is a true signal, right? Whereas the old signal, the arrow, is just the arrow, right? And that's, for our purposes, is false, right? That's false. Now, what makes a signal true versus false? Very, very simple idea. If we are looking for an uptrend breakout, the high of this candle, the high, not the close, but just the high of this candle has to be higher than the high of this candle. Higher high, trend strength. We have a higher high breakout. We have more confidence that it's a real breakout. And as you can see, that's definitely true. And boom, 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 we take the trade, make the money, and we're done, right? On the short side, same logic applies, except now we're looking for lower lows. So let's look for a true. And by the way, just because it's true doesn't mean it's accurate, right? So here's a higher high off the prior. And by the way, it goes from the prior, not from the prior high or prior low, just any of the prior. If the prior candle was a down arrow, we use that measurement. If it was an up arrow, we use this measurement. So in this case, this is a higher high off this up arrow. It's presumably a true candle, true signal, boom, false signal, right? Here's a true signal because the high over here is lower than the high over here. It's a lower low, presumably, a signal, a true signal, right? Now, it's a marginal improvement. It doesn't mean that every single signal is true. And it certainly doesn't mean that, that you should trust it implicitly. Furthermore, it's only really effective during what I call high volatility sessions, which is basically like from the New York Open to the New York close, and from the beginning of Asia, like 8 p.m. New York to like 10 o'clock at night New York. Just Asia start, you're gonna get sometimes, you're gonna get good volatility, because what you're looking for is continuity. And of course, when you don't have continuity, it doesn't matter what signal you have. When you don't have continuity, when you have this kind of a movement, but down, up, down, up, down, up range, they're all going to be false. Every breakout will be a fake out because they're constrained by a very, very tight range, right? So I basically don't trade at all during these times. Secondarily, and this is another interesting thing, if I have, and this is sort of a more nuanced variant, if I have two consecutive downs, so I have a down, the ideal setup for me, let's just go through what's the perfect trade, and then what all the other variants. So the perfect trade for me is we're starting New York, right? And I have a change of regime. I go from a true down to a true up, right? Or from a true up to a true down. I get a change of regime. The prior one is a negative. The new one is a change of regime. I have strong possibility that it goes higher, and I take that to its full content, right? I have New York, and I don't have this is not a true candle, but I have the first, it's New York session, so lots of volatility, and I have a true signal. I take it. It's all good, right? However, if I get in a situation where I have two consecutive downs or two consecutive ups, and I think as I'm looking at this, I'm just wondering if let's see if I can color this a different color, just because this is such a horrible empty file. And by the way, I will make this. We're going to make this trading view, so it's going to be a lot easier on the eyes. Let me see if I can color this. I don't know, orange. Would this be any good? Let's see if this makes any difference on our visibility. Doesn't make any difference. You still can't see. Still can't see it for shit. Okay. I mean, just trust me on this. You have to download it and look at it yourself. But the point being is, if I am trading two consecutive, so this is two consecutive downs, right? First down, second down, right? Especially in pre-New York, I'd never take the second signal. Always, if you're going to take a signal, take the first one, because the continuity of trend diminishes with the frequency of the signal, right? Even in New York, if I have two continuous up arrows, right? What I will do is I will pass up on the second signal and then actually look and see if I can get a dip confirmation, right? So if I have a dip confirmation, if I have two consecutive signals and a dip confirmation, then maybe I will take the dip. You know, you have to use a little bit of your own intelligence. But overall, what you want to do, what you want to be, is absolutely in the New York session with the true signals for the first 3-4 hours of the day. The way I sort of structured myself to give you guys better guidance is 10 o'clock to 1900 GMT. That's really my window of when I want to trade. That's basically 6 in the morning till about 3 in the afternoon, right? If I'm in that window and I'm trading 1 minute charts, I'm in pretty good shape. All right. And I'm trading 1 minute charts on what I call true signals, right? So does that make sense to everybody? Is everybody crisp and clear on what I'm doing here and how I'm trading it? Let's review. Let's discuss. Let's also, by the way, while we're looking at discussing this, take a look at all the other signals. Nothing on the Dow. Dow had a true signal a long time ago. The German is got. Let's just see if we can reapply. You have to reapply the template because it will on 4. It's going to repaint it a million times. But so you can eyeball the situation very well. You can see that if this breaks the lows, that will be a true signal because obviously the prior signal here is much higher, so it means it's going to make a lower high, and therefore the chance of this being a successful trade is pretty good. I'm looking over here. So this is interesting. Let's see what a DAX is at. So DAX has a true signal here. You would have gotten long here at 66. The retrace against you was around 57. So 2010, more than enough space for it to work. Then what happened here is this break to the downside. And this is why I did this, is because if you're in a big uptrend and then you have a sell-off, a lot of times that sell-off is a retrace sell-off. It means there's more continuity to the upside. Or at the very minimum, you're going to get stopped on just because it's it's basically strong trend, small sell-off, right? So therefore, it's not a true signal because this is a higher low than this one. And when I'm selling, I want to be lower low. So you avoid unnecessary. This is pretty much would have been a stop out, right? If you want to get super cute and you get a false signal and you say, okay, you know what? I have a false signal, but if I get a dip confirm, then I'm going to take the dip. You can definitely do that. You could certainly give yourself that try, and I think that opens you up to more possibilities. But generally, I just stick to straight up true breakout signals to the trade, and watch those. So right now we have nothing setting up anywhere on the indices. So we might as well turn our attention. Let's just go to the 5-minute chart, just for argument's sake, and let's see if we can apply this idea here. And you can see, for example, here's euro yen on a 5-minute chart. I trade this with a 10-20, nice clean 10-point move here to the upside. Even here, this was a sell-off, and this was good for 10 points too. I think you close this at 18, and the low was maybe not 10, not quite. I mean, this is what 5-minute chart. I guess on a 5-minute chart, you have to trade with a 5-10, maybe 5-10, because it's just not enough juice here. Canada on a 5-minute chart. Let's see what this looks like now. The true signal here, let's see how much of a retrace it gave you. If you bought it here, 51, The low was 36. Yeah, so can't, well, I don't know how high did this go? It's 51 to, nah, nothing. Canada doing its usual super sharp retraces. One of the interesting things you need to appreciate when you're trading this stuff is that just like in indices, if you're trading this is a great axiom actually for all of us to recognize. The shorter the time frame, the more liquid the instrument needs to be, right? Because liquidity is what creates continuity, and you can literally see this. So like, for example, if I'm trading currencies, there's literally just 3, maybe 4 pairs that I would consider worthy of a 5-minute chart. That would be euro dollar, pound dollar, dollar yen, and euro yen. At most, like literally at most. Those are my maximum that I would think. Because when you go to the com dollars, you see the bullshit they love to do on com dollars. Com dollars is a notorious up and down, up and down, up and down. Now, if I go to hourly or 4 hours, a lot of those problems dissolve. But if I'm trading the 5-minute, I absolutely need the clean, clear continuity of high liquidity pairs. So if I go over here, let me just go combo new, right? You can see, look, combo new, clean true breakout. I'm long here. It goes maybe 5, 6 against me, a nice clean, 5 points on continuity. This is obviously, false signal because it's chop city here in midday. But, when you're trading currencies, you have to just accept that you're obviously going to get stuffed. That's why on a 5-minute chart, I'd only risk 10 points, So I make 5 points here, lose 10, win 5. You're looking to win 3 out of 4. So let me see. I don't even know how this is looking here. You actually would have done that by opening Europe. You're 3 out of 4 in Europe because you're coming in over here, nice clean true signal, boom, you're done. That's it. You don't need much. That's the other thing is you really don't need much. Here's cable on a 5-minute chart. It's obviously a cable. I think you really can't. You probably can't trade it with a 10.5. You have to trade it with a 10.20. But on a 10.20, it's a very reasonable. Look at it. Boom, nice, clean, reasonable trade. Even here, I get long over here at 8. Does it extend to 18? Yeah, it goes right up to 18, hits my 10, and I'm done. So that's kind of a very interesting corollary that I actually just thought of it, but I've been doing it intuitively. And then that's why, I want to trade NASDAQ and I want to trade Dow and I want to trade the S&P as my only. That's why, German is not sort of the, it's okay, but it's, it's nowhere near as great as the NASDAQ because liquidity is always problematic in the German, right? Relative to NASDAQ and everything else, or the Dow. And actually, we should, even though we don't really trade the S&P, we really should put the S&P on here because it's worthwhile. We certainly trade it on the future side. So let's put this on here. Why is this not working? Okay, so go to 1 minute, and then we'll put the combo new on there. You can see it. The S&P. I really feel like if I'm trading Dow with a 10.20, S&P I really have to trade with a 3.6. So if I'm long here, this is a very, very shallow move. But if I'm long here at 73, the low, what's the low over here? 71. I mean, I only have risking 2, and it goes to 78. Like a nice clean extension. Although the S&P is kind of horrible on the CFDs because of the spreads. What is this? It's like a 50-cent spread, right? I think it's a 50-cent spread. I think with a 3.6 target, and obviously assuming you're winning 3 out of 4, so you have a win here, you have a loss here, you have a win here, you're already 2 for 1. It's very I would probably start from this trade onward. So now you're 2 up, 1 down. If you get 1 more, you're 3 up and down. Yeah, futures S&P futures are excellent. I mean, S&P futures are just beautiful. It's just on the CFDs because the spreads are so big, you're gonna be suffering a little bit. But I still think it's a great instrument, and it's a great instrument for this particular structure, which is just waits until you have the right setup, to trade with it. But the point being is that, if you're scalping, which is what we do, and we just kind of limit our involvement to euro, pound, yen, euro, yen on the intraday currencies, and NASDAQ, Dow, S&P, German on the indices. It's a universe of 8 instruments all day long. As long as you stay true to the signals, you'll be in good shape most of the time. I mean, the whole point is you're trading with a 1 to 2 risk, and you're hoping to hit 3 out of 4. I mean, that's sort of like your goal and your target. I have actually a lot more to say about that in my this week's column. There's a really interesting. I stumbled across a really interesting YouTube channel called Productivity. What the fuck is it called? Let me just tell you what it's called. It's called Productivity Game. Productivity Game. And the guy summarizes like every productivity book in the world in like 5-minute videos. So a lot of it is garbage, but some of it is interesting. And there was this one book called The 4 Principles of Execution that really talks about how all great companies execute using this particular structure. And I realized it's completely translatable and applicable to trading. Its ability to kind of create a dashboard. And the top of the dashboard is your P&L. That's the most important thing that you're focusing on. And then underneath it is what they call lagging behaviors, which is, are you taking trades? Are you taking the trades you're supposed to take? And then leading behaviors is, are you doing the analysis, and are you using the risk control that you're supposed to do, on the trade? So what's fascinating is I thought, I'm having the algo run it. I'm really doing all my leading behaviors correctly. I'm doing my lagging behaviors correctly. And when I started to just kind of jot down my trades relative to how, they were supposed to do, there was like 8 legitimate trades yesterday. And I did 15. So I did 9. Yeah, I did 17 trades. So I did 9 trades that were not to plan, and it was really eye-opening. And I was like, when I realized that, I really pushed stop back. Today so far, I'm pretty much on plan. There's no trade I've taken that is not on plan. I have some trades I didn't execute to its full potential, to its target and stuff like that. So I guess I did a leading trade, but not the full completion. But the point is, it's a very, very interesting way to simply and clearly create a very easy to follow and a very easy to analyze scoreboard for what you're doing every day. And as soon as I do it properly for this particular setup, like as soon as I kind of figure out exactly how I want to, what is a leading behavior, what is a lagging behavior, and what is the scoreboard, I'll post the little note sheet the little scorecard that I make. And you guys can use it. But it's very, very valuable. It's like really, really cool. I think I'm just going to make it into a spreadsheet because that'll be the easiest thing. We'll make it into a scorecard spreadsheet. So I got nothing going on here. NAS, I got nothing going on. So I'll be watching this. This is interesting. So if this is the high over here. If this breaks to the higher high, that's going to give us a true signal to the upside in the DAX, which we can watch. Here, I'm going to get rid of dollar CAD because that's a useless pair. Euro dollar is running away from us. Pound dollar, interesting. So pound dollar actually has a false signal. So you see, this is a false signal because the higher high here is nowhere near, it's coming off of a big sell-off. What it's telling you is coming off of a big sell-off, right? So if it's coming off a big sell-off, I don't want to be taking this trade as a trade. And you can see if I took this trade, it actually is, would have already, I just barely would have been, broken even. However, what I like about this, it's interesting that, it's interesting why, I'm wondering why this didn't show me why didn't it show me an arrow? Oh, I think I know what it is. I know what it is. This configuration is a little too strict. It should not be entry, require level break, true, but not require level control, false. This needs to be false. Okay, yeah. So what I will do is if I have a false signal, what I call a false signal, and then I have a, trend break, a dip break, I would have been long here at around 45, right? So being long here 45, you would have pretty much made the 10 points here. I don't necessarily want to chase this thing right now, so we'll leave that be. Looks like NAS is starting to try to break up again. Let's give this a nice clean look here. You would have to beat this high in order for this to be a legitimate uptrade. Anyways, everybody clear on the stuff that I'm doing, the stuff that I'm looking at. We have pound. Let me see what the yen is on the 5 minute. And I'm going to put this on here. Yen really fell like a stone here. Kathy's CAD yen trade really worked very well as a result of this. Really dragged down all the yen pairs here nicely. Everybody's good. Okay, let me see what's going on here on my thing. Interesting. Okay. I don't use the old reversal buy and sell. I don't. Because too much. You only need when is the execution on the break of the close? Always on the close. Remember, Krasi, everything we do is always on the close. So this will only complete and show you once the candle closes. Like it starts to paint, but like it actually stops painting and becomes firm only on the close. So here we got the NAS. Is NAS breaking out of NAS? Here, sorry. This is obviously just combo new. So if this breaks, so this is the level. If we close above this level, it's clearly going to be higher than this level. So it's going to give us a chance to trade to the upside for possibly another expansion to the upside here. So we'll be watching that. We'll see if like in other words, if this candle closes through this level, that's going to be another positive candle. But remember, this will be like a second positive candle in a row, right? And again, I am not a lover of buying two in a row. So if I get a second positive, what I mean by second positive is there's no negative in between. It's two positives, right? So if that's the case, then I may actually pass up and then look for a dip trade. If I, look for a dip trade for it to occur, because it may be just a situation where it breaks and then falls off completely. I don't want to. I'm trying to avoid the double tops or double bottoms as much as possible. All of this, by the way, what's frustrating is, of course, the more consistent you want to be. This is really the interesting discovery I'm making by kind of keeping myself to an execution scoreboard. The more consistent you want to be, the less you trade, which is very, very annoying, because you want to be in every trade all the time. Like right now, you probably just want to take this trade, right? It's a positive trade. You want to make a run for it. What the fuck? It's good. Let's give it a shot. But the probability that this isn't, we need it to be the question we always want to ask, is this a 75% trade? And the answer is, when it's a second trade, the answer is no. It's somewhere between 65 and 75. So it's weaker. weaker than the first trade, which is, you know, somewhere between 70 and 80, right? It's like 10% range weaker. And so you don't want to, you could win, but your range of probabilities becomes smaller. And do you want to play that smaller range of probabilities? It's interesting when you start thinking in terms of range of probabilities instead of just, yes, no binary trades. You then have a little bit more nuance and a little bit more appreciation for holding off, instead of just constantly banging away. But yeah, I mean, you're spending a lot of your time just not doing anything because you're trying to be consistent in your approach. Just trying to see if there's anything on the effects side. Really nothing here. The cable trade was a good dip trade, but that's about it. Yen has got nothing. It's all, they're all in trends. S&P is in a deep uptrend, so there's nothing going on over here either. So and by the way, you see how the Nasdaq didn't even give us a true signal. It kind of died, right, for the time being. It looks like it wants to make, trying to make another second run for this whole thing. One of the interesting things when you start thinking ranges and probabilities is you don't get tempted for mediocre trades. You're like, once you understand what you're looking for, what you really, really want out of price action, you stop gambling on just dumbass trades just because, it looks like it's going up. It might go, you stop making emotional trades. You start trying to make statistical trades, right? It was very, very tempting to try to get along this thing because it would look like it was a big breakout. And of course, it, turned into a complete fake out. But it never gave, it didn't even remotely give us a signal. But if you're just looking to scalp all day long, you would have chased that right into a stop loss. So, so that's kind of how that played out. So today seems to be a very, it's typical Tuesday where we're just doing a little bit of consolidation, one step forward, two steps backwards kind of a thing. Not much really going on, don't have any really, really great trades. You guys have any questions for me? Anything on your mind? Anybody who's new in the room here? Chat ask Boris, introduce yourself, say hello to me, ask me any questions. Yeah, so Krasi, I wanted to ask you about that because I wasn't sure. Let's look at this. Okay, you're gonna tell me which one it is that you need to update, because I want to make sure that I wasn't sure which one you wanted me to update. So let's go here. So we're gonna go BK proprietary. We're gonna go into reversal trader pure. That's the one you're in. Just tell me which one it is. This is the one. Reversal trader pure high low EA, right? Is this the one you want? Okay. All right. I will update that. I will update that. No problem. Okay. And I'll delete this one and I'll put the new one in there. Okay. So it's reversal period. So this was basically taking out the highs and the lows. Okay. Now I understand. I just wasn't sure, so I want to make sure. Okay. German doing nothing. Nothing, nobody's doing anything. Like, it's just, and this is the kind of time where I just love to just, bullshit around and pick completely random trades and sometimes get lucky and sometimes not. And this is what you try to, really avoid doing. Consistency means that you don't do random trades. But that's the hardest part about kind of sticking to the game plan, is that you don't do these kind of idiotic trades. So speaking of which, by the way, of like, choppy big ass trades, when you're talking about like pound kiwi, you really, I think, have to go on an hour. The more choppy, the more volatile the longer the time frame in order to give you a signal that's legitimate. So here's a legitimate signal to the upside. Remember how much volatility there is here. So you long here at 89, and your slide against you is 54. What's the lowest here? 36. You're really trading with like a so we're 80 40 kind of a move. It's got to be like an 80 stop 40 target on the super high volatility. And I'm actually curious here when you've made the 40 target. So if you're short here at 67, what's the low over here? 26. Yeah, you would have made it. You just made it. Just made the 40s. So yeah, I guess it's like an 80-40 stop. Yeah. Well, so Karen, this exercise, what I call the dashboard, the trading dashboard, is really interesting. So I'll do a trading dashboard for combo, and I just got to figure out into the the three structures that they want, and then you guys can kind of apply it, for each other. Everybody says that you're just calmer when you're live trading because I keep you from doing dumbass trades because I'm not trading myself. This is my job in life is to not trade. I guess it is. We got nothing, guys. I mean, it's really quiet. It might it might start popping like after 11, but right now I'm looking at the S&P. Even if it triggers a sell, it's not going to be a sell because the sell is going to be way above. So it's really not going to be a true signal. Well, let's see what the NAS is. NAS said actually, NAS is setting up a true sell signal right now because it is off the highs. So let's see if this works. We gotta give it a few seconds. Okay, we'll get short here at 83, targeting 73. Let's see if this works. Let's see if this trade works. So this is a legitimate higher, lower high trade. And let's see if we get a little bit of a sell-off. The market seems to, got a little heavy, did a double top. But, it can always retrace here. It's still a positive bias on the market. So we'll see if this trade completes. The other thing is to remember is that you're always shooting for 3 out of 4. So by very definition, you're going to have a loser in 4 trades as a basket. Almost, it's like a guarantee. And sometimes you're going to have 2 losers in a row because sometimes you get very positive batches of 4 winners in a row. So very, very important to appreciate that you are trading to lose every single day, right? That if you're not having a loser in your batch, you're just lucky. You're just lucky. It's not that you're good. It's part of the process. So that's very, very hard. Like kind of mentally, you have to accept that because the natural impact after we hit the loser is to just go, oh, let me go make that back. And you do not want to do that. You never want to make it back. You only want to trade the next proper setup. It's another one of my pet peeve weaknesses that I've been, really, really trying to work on. And you have to just kind of mentally rehearse yourself to this. You have to understand, no, it's not, it's just not, that's not what you want to be doing. That's deviating from your dashboard, deviating from your execution dashboard by doing that. So this is kind of getting stuffed against us. So, we're at 83. The stop would be 03 on the CFDs. The futures are different, but it's a legitimate trade. Works, whether it works or not is simply simply a function of probabilities, right? It's a good clean setup. You can really see, like, think about the market when you're trading it every day. You can really, really see the same patterns all over again. So, you get the bursts, you get the retraces, you get the tests, and then, sometimes you get the bounces, and sometimes you get the complete, continuation to the downsides. It seems like, it's interesting. Yesterday was a really, really strong trend day in I guess, a relatively low liquidity day because the Europeans were off. Today, I guess the Europeans are back. And there's actually kind of a two-way market here between buyers and sellers, but still, pretty much the buy side is the more dominant side. So even if the sell signal is true, in not in any kind of like objective sense, just true in our analytical sense, it's true to our analysis. This one may not work. We might just get stuffed on this one, which is perfectly fine. For the day, I'm still maintaining. I'm basically pretty much maintaining my 3 out of 4 right now. Even if this one gets stuffed, I'll be at 3 out of 4. But this one looks like we're gonna get stuffed on this move. It's really, we just ran right into the bottom of the move, which happens. And obviously, a move that's just chop, chop, chop like this, like we have today, is the most disadvantageous regime for us. It's the one that's the least attractive. We got, I'm stopped on futures, so I guess I'm stopped on CFDs. So this one just didn't work, which is okay. That's part of what we do. So we had one trade that worked to the upside, one trade did not work, to the downside, and now we just look, for new ideas. Wow, FX is really, really quiet. Man, it's just like no movement whatsoever. Is that right? Yeah, really super quiet on FX. So, if you want, I will take this trade at 90, at like 90, 91 right here, as a possible move. I'd like this. I'm going to need this to complete. It needs to complete out of the moving average. So let's watch this for a second, because it didn't really complete out of the moving average envelope. So no, it's probably not a trade yet. Not a trade. No, let's give this a shot. My whole point is like, if I want to press the trade on a reasonable short, so I have 38 seconds to set up a while. It needs to fall out of this move here. I need to be able to have like a legitimate reason for why I want to short this thing. And it's interesting because on the futures it actually showed up as a dip trade, but here it didn't. So we'll have to watch. I have to see this. Nope, not a dip trade, so there's no trades. No trades on this one. It'll pass it up. There'll be better opportunities as the day goes by. Yeah, I mean, I got clipped on that trail as well. But as I said, I'm aiming basically sort of like the average sample is about 8 trades a day. That is combining longs and shorts. And trying to be 6 winners, 2 losers. That's sort of like your target on the move, on how it's working. Just watching the NAS to see if it does dip out, like if this does dip out of the moving average, it may be worthwhile to give it a shot, for a shot. But if it's turning at this point, and all the moving averages are going to start turning. It suggested, this was it. This was the dip for the buyers. And we're basically, it's not like I'm really bullish to the upside because we're capped. We're basically in the worst environment we can be for our trade, just contained to the upside, contained to the downside. The best thing sometimes is just to simply stand back. When you see this kind of a structure, it's definitely worthwhile to just stand back for a while until some direction develops, because otherwise we're just chopping up or chopping down on the move. Now, oh no, Dow is just not a trade here because it's high up. There's the S&P. See, the S&P is what I call a false signal, in a sense that it's a higher low. But what's interesting here is we can maybe make this our last trade of the day if we can get the opportunity. If we get a dip move out of it, like a dip move out of the S&P, then that would suggest to you that I might actually, I'm watching this trade right now. The good thing about the setup is that unless you have price action confirming your bias, it stops you from doing anything. Like you don't have a dip out of the moving average. Like if this candle turns red, yes, maybe then you want to participate in this thing to the downside. But if it doesn't, it's clearly a shallow dip, especially in the S&P, which is a much stronger move here than NAS. But NAS is just really breaking out, right? So now it gets interesting because now we're going to be trading against this. We're trading against this. So it's going to be a natural. It's almost guaranteed to be a true signal to the upside. So we'll see if this one, we're going to give it, obviously we need 3 candles and see if it can break up to the upside. But if it does, should give us some confidence that maybe we're going to challenge the highs again. Sorry. We have a couple more candles here, so I'm excuse me. And if we want to fool around, so this is a false signal, but now we have a dip out over here at 5. So 15 stop, 130.100 target for a 510. Let's give it a shot. Let's see if a euro yen works here. We'll keep an eye on that, just as a side trade. So this should, let me see if I can combo new. This is trading against this level. It's got to break this level, but if it does, that's going to be a net positive move. We'll see how this the last of our trades here. very anemic price action today. I think the markets, the markets had these big moves, and they kind of finished up. That's it. So this is pushing. I guess this is going to be the third high, right? Or no, it's got to cross that red one. It's interesting. Try 1, 2, 3. Or maybe no. I guess this is the third candle high. So this is the high against which it needs to break. See how that's pushing higher? So I think this is the level. So obviously, if this level gets broken, that's going to be a clean uptrade. And you can see it's, see how it's starting to signal and comes back, as the price action builds. But it's really very anemic price action today, right? So not very conducive to the kind of trading we like to do, which is based on breakout continuities. Yeah, MT5 is coming, Boris. It's all like, this is all obviously early beta stuff. We're still working on MT5, and it will be, there'll be an MT5 and there'll be a trading view as well. So there will be trades. The other trade that I do like a lot, as kind of a complementary trade, part of the, could be part of the plan, is the first dip trade post the true signal. If you have a true signal and then you have a dip trade, especially like on FX, you generally have some interesting possibilities. So this was a dip trade. I mean, this was a false signal, but yeah, with dip trade. But it's here's a dip trade with a true signal, and it makes it's working to the downside. Euro yen is, we needed to see 30.100, right? So we're trying to see 30.100. We keep it like, you can't, 3 pips, and it hasn't been able to move 3 pips in four minutes. So I think we're going to pass up. I'm going to pass up on this NAS. It's too slow, and I don't like the price action here. So we're going to pass up on this move to the upside here, and we can see if the euro yen eventually closes up to our target as a small one. But the most important part is just to kind of show you the process, and just take the trades as we can. So so this took a trade. I'm passing up on this particular trade, but you guys can do it if you want. It might work. I mean, it's clearly working a little bit here right now. So it's a legitimate trade. I'm just sort of the price action has been so cautious that I really I'm just not feeling it. So we could claim that we made 3 points here, because if I am going to take the trade, I took it on my futures and I just blew out of it for 3 points. But it is a legitimate trade. Like you could take it as part of the trade plan, and it may actually work. It's just that it seems like the overall price action today is so weak that it's really pushing it hard. Like, I think you basically, if you came in here, what was it, 14? Yeah, yeah. If I trusted the setup more, we could have made the full move. Look at that, and it's actually making the full move. So I should have stuck in the trade. It's my first deviation from plan today. I should have stayed with a plan. But good. I mean, at least somebody made a little bit of that back, right? A little bit of that back. Oh, and look, and the euro yen is finally working. So I do complete my 5 points on euro yen. So that actually works on the thing. So good. So we closed up the day with 2 positive trades. That was actually very deceptive. I should have stayed with this trade. That was a good trade. And I didn't let it complete to its full potential. I should have done that. So it's sort of like my first real mistake of the day, but but it just goes to show you how good I think, or how much I like the new methodology, because it really does make you wait for the good stuff. Yeah, I should have stayed. I should have stayed to my trading plan. I think I got faked out by, and this happens a lot. Sometimes you get like very, very choppy price action in this 10-11, and then eventually buyers make up their mind and they start lifting it to fresh highs. That's exactly what happened. The sellers try to sell it. They bought the dips, and sometimes it's very hard to determine whether something is consolidation and range or consolidation. So range means this would have been a failure. Consolidation means it was ready for breakout, and that's always a matter of judgment. But anyways, still not a bad day. Really, there was 1, 2, 3, 4 trades. One was a loser, and that's sort of where we're at. It's just that I didn't take my winners to its full fruition, but but they definitely worked. All right, guys. Everybody have a great day. Enjoy the new variant. And Krasi, I'll update the high lows for you in just a bit. Thank you, guys. Everybody have a great day. I'll see you tomorrow.